Alright everyone, here we are with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video, and to stay tuned on in towards the second half of this video, guys. Right after this chart analysis and everything we have to cover and discuss, I have a ticker symbol for you guys that you won't want to miss, that you definitely want to add to your watch list moving forward, presenting itself as an opportunity, as well as I'm going to share with you guys the opportunities I found yesterday morning and shared with every single member over at the Discord. And if that's something you want to become part of, you're more than welcome to join us. You'll gain access to the stocks I watch daily and a growing community of investors, all looking to learn and grow together to maximize profits and minimize losses. And we look forward to having you join us. So here we are. We're going to talk about in this video, stock market crash or correction, right? Stock market crash or correction. Now the big question here is, how bad could a correction be? How bad a crash could be, right? So corrections are anywhere from 5 to 15%, and a crash could be anywhere beyond 15, 20% and upwards to 30, 40, 50% type of pullbacks. Now, the stock market has overextended pretty big. I mean, when you pull up all the different indicators, you will see that it is pretty extended and it has room to pull back, and it's been pulling back, and this could continue going into next week. Now, historically speaking, towards July, sometime in July, the stock market does pull back a little bit. You could see it here even last year, right? In June, it pulled back a little bit going into July in the beginning, and then there you go. You see that pullback towards the end, that last week, and then towards the beginning of July, things started to pull back up, and then things continued. But there was a little bit of a hiccup towards the middle of June, towards the end of June, pulling back a little bit. But that's just last year. We go back even further, right? And we look back at previous times during July. Let's just look at 2019, for example. And you look at when July came around, right? In July, there was usually that pullback leading towards it. Look, June, right here, of 2018, actually. This is not 2019. Pulling back towards July, right? And we're in the middle of these days, right? The 19th, the 20th, the 21st. You know, those days are coming up right now in the month that we're in. We're on the 19th right now. We're about to go into that week where there could be a slight pullback. And then after July, things kind of continue to move. But we have some things to be aware of this year that's a little bit different than 2018 and even different than 2019. Here you are again, May, June, right? Beginning of June, middle of June, and going into July. So this 2019 run was a little bit different. There was a little bit of pullbacks, but things were moving forward, and things fell a little bit after towards August, right? The end of July and August. But there was a pullback. It's almost like it got priced in before then it ran, right? And then where we're at now, which we saw last year, there was a pullback going towards July, and where we're at now, there's a pullback going towards July. Now the question is, how long could this pullback be? And because the history of the chart, is it guaranteed to be the same? And what this means? Well, there's a few things right now that are actually becoming pretty obvious if you go ahead and look at different sectors. Like growth sectors, just to give you a few that I've been watching, Roku, right? Even Apple, Microsoft, Nvidia, and many others in the growth sector, right? Look them up. Look them up. Salesforce, all those different stocks. From the date that the Federal Reserve spoke, which was the 16th, right? They've been going up, and the S&P has been going down, okay? And as you're about to see on the screen, all these different articles, all these different posts from different experts that you're about to see right now have been posted a few days before the Federal Reserve meeting, and some have been posted on the date and a few days after. So this is what's been going on for the last week of speculation, and the stock market is pulling back, and it seems to be, because if you look at the growth sector, a lot of investors that are in growth are finally breaking even or slightly profitable or actually getting close to breaking even, and their losses are a little bit less than they were before because growth stocks are going higher, right? They're going back up. It seems like there's a rotation happening, but there's two things that has me a little bit concerned, and it has to do with some of those stocks that have to do with high multiples, and then also cyclical and reopening plays are pulling back, and then there's just a full entire spectrum of speculation right now going on where we could see a correction. I don't really think we're going to see a crash, but a correction is possible. And we're going to look at an article that talks about why it's possible. The last time I talked about us going into a correction was back here in February all the way towards March. Talked about it, and I saw it coming. I stated it around February 17th, 16th. The videos are there. I even drew out the possible pattern, and there it is. It happened. And one of the biggest things that I paid attention to was not the bottoms, if not the peaks. Because when the peaks happen, that's the point you want to avoid. The bottoms is where you're supposed to become excited, because this is where opportunities actually happen. Now, even though the S&P continued going upwards, right, which I talked about in many of my videos, there was a detachment from investors' portfolios and the stock market's performance, because a lot of the value plays and cyclical and reopening plays were getting all the love and attention, which are the ones that are pulling back now, and you can see it reflect in the S&P. And the ones that were pulling back here in February, April, even up to May are the ones that are going up now. But the question is, even though those growth plays are going up, could they continue to hold themselves up, or are they going to fall into this correction as well? Because there's a bigger picture going on than just rotationary type of effects, right? Right now it seems like it's a rotation. Some could say it's a bull trap. Some could say it is a confirmed rotation. But the issue is, overall in the market, there will be a pullback that even some of these stocks that have already started to run, especially growth stocks, they may pull back a little bit with this whole entire possible correction. A correction is at least 10% or more. And right now, 4,200, 10% of that would be $420 less. Okay, up to 20 and 15 could be a full crash. And that's where it starts to become a little bit more worrisome of a pullback, and this could end up back up here at 3,700, 3,500, almost to the point of 3,400. Super important to be aware of that would be a crash. Now, a crash to happen this year is not impossible, but I'm not really focused on a crash, if not a correction. And corrections, we've already seen the opportunities they give, and through this whole correction, I continue to look for opportunities no matter what daily, like the stocks I've mentioned on the Discord, like the stocks you've seen towards the second half of the video, and we look at the charts and where I mentioned them. But it doesn't change the fact of portfolios actually getting hit, because a portfolio is one thing and trading is another thing. So portfolios are probably going to feel this correction or slight crash, right? So out of those that I stated and shared with you guys, the most important one that stands out to me is obviously this right here, how Micheal Burry, which right now if you go to see his tweets, and these were the dates, this was on the 17th, 2 days ago, everything has been removed. And this is where he's being very affirmative on his statements, right? The speculation and hype that's going on right now is drawing in retail before the mother of all crashes. Now, this could be a crash that he's anticipating a year from now, 6 months from now. He doesn't really have a time frame. There could be a correction right now, but I don't really see a crash. And if there is a crash, well, that's something that we'll have to reanalyze and see. But all of the whole entire Wall Street, Main Street, and everywhere you look, no one's really talking about a crash, but there are possible correction signs starting to form, right? And talking about the FOMO here, and when crypto falls from trillions or meme stocks fall from tens of billions, Main Street, which is us, the retail investors, loses, and those losses will approach the size of countries. History has not changed. Basically saying he's seen this before, and he's about to see it before his eyes again. And all of this hype is creating these bubbles. He stated this on the 15th. This was a few days before, right? Well, actually 1 day before Jerome Powell speaking and getting asked all the questions and interviewed on the 16th. And he stated, people always ask me what is going on in the markets. It's simple, greatest speculative bubble of all time in all things by 2 orders of magnitude. Flying Pigs 360. I highly encourage you to look up what that means, and you'll get a little bit more insight of what he means, of what's going on. But he's saying that there's a bubble forming. He doesn't really emphasize when it's going to burst, but he is anticipating it. Okay? As you saw earlier as well on the different articles that have came up, the Warren Buffett indicator, right? That has actually went ahead and went too high. And usually that sends a signal of a possible pullback. Now, the Federal Reserve meeting was key this week because the Federal Reserve talked in a very paused way about inflation, even though it's a little bit higher than it should be. They actually rose their inflation expectations. And also the Federal Reserve went ahead and stated, that they're going to continue easy money policy. And that's why growth is continuing to push up. And if you really look up the 10-year Treasury, it's not as high as people would have anticipated it to be. And it's kind of just sitting there. It's spiked up and it's just kind of sitting there in that point of where we've seen it go, but it's not hitting newer highs, right? And it's just sitting there at that level. And I feel like that could cool off. But right now, if there's bigger spikes that go to newer highs, this could continue to pull back as well. And not only that, the fact that the Federal Reserve, for the first time, went from a very dovish to a much more hawkish approach. And he did it, and that was Jerome Powell, in a very subtle way. And he stated that tapering is coming. That's becoming more hawkish, and that scares investors as well. This right here is literally an article that came out on the 12th, and basically saying a sizable stock market decline is unavoidable, but that also means opportunity right around the corner. And that's what I want you guys to be aware of. These corrections and crashes, they happen. That's normal. It's part of the way of everything working out of the equilibrium. And in these crashes and corrections are the biggest opportunities as an investor to see gains, right? But you won't see it overnight. And it's not going to make sense sometimes to buy these stocks, but you're going to see them go back up several months later, or even a year later, or even years to come. Now, this has a little bit to do with, obviously, the stock market indicator that Warren Buffett uses. Okay, that valuations are a little too high. So there's 2 people already stating something similar in different ways. History says we're in trouble, basically talking about the fact that there could be 1 or 2 double-digit percentage declines within 3 years following the bottom of everything that's going on with the markets, basically saying that a bear market could be coming. And this could be something that a lot of investors are anticipating once rate hikes happen, which is closer to the end of 2022 or the second half of 2022, as some are speculating that it could happen sooner, or towards 2023 as the Fed expects, right? So that's why some of these articles, we may not even see them unravel right now, but a correction is possible, especially with all this negative news coming out and slight rotation forming. Crashes and corrections happen frequently. That is very true. And it has retraced at least 10% since the 1950s, the S&P 500. Put another way, we observe an official correction or crash in the benchmark index on average every 1.5 years, but almost every 2 years, basically. So corrections are bound to happen. They're part of the cycle, and that's where opportunities actually happen. And stocks do need to cool off so they can hit newer highs. That's how they keep bouncing. These corrections don't hurt those that caught it at the bottom, but it hurts those that are getting in through the run. And that's where the stock market takes patience, due diligence, emotional intelligence to know what it is that you're doing when you're picking yourself up into certain positions. That's why research is so important and conviction needs to stay high. The Federal Reserve cannot remain dovish forever. That is key. They basically have already turned just a bit hawkish, and the hawkish is expected very soon. And a lot of people are also focusing on margin depth. It's going to highs never seen before, and it's right here. That's the highest we've seen, and it could go higher. And the moment margin dip actually goes lower, that could also signal a slight pullback. That's how some of the biggest corrections and crashes have begun. When margin dip, instead of going higher, is going lower, but it's at extreme levels at this point. So a pullback is unavoidable. It's bound to happen. But during this pullback, growth is growing. It seems like there's a rotation, but I want every single investor and viewer to be prepared that if growth does pull back, it might become part of this correction as well, but it won't pull back to the lows that it reached in March or February, in my opinion. In my opinion, I think it won't touch that low, and if it does, well, the opportunity just became even bigger, because if you didn't catch it that low, you just got another opportunity to catch it even lower. So the stock market right now is in shaking grounds, and I think that the stock market is pricing in, right, the possibility that the Federal Reserve is going to talk about tapering next month or in one of the next following meetings, in the next two meetings, and that's going to help avoid possibly a taper tantrum, which actually made the stock market pull back pretty fast when they started talking about tapering. And instead, this time, the market kind of receives it, and it kind of already priced in. It could actually kind of make stocks go a little lower or sit sideways before they start to go up again. And once everybody forgets about the tapering and knows that it's happening, over time, the stock market can start taking off the training wheels and just ride the bike on their own. And that's really one of the biggest things that the market needs right now, to not depend on the Federal Reserve. Now, one of the biggest things I want you to be aware of on why corrections are actually opportunities, because this correction happened here, right? We had another correction, right, back here in January, and those that caught the dip here and caught the dip here and has held for the last 6 months would be up a total. Let's just say they bought one share each time. That would be 2 shares of 3,000. Let's just average it out of 600. That would be a total amount of $7,200 into the S&P 500, right? Index. And it's gone up to this point before this pullback. That would give each investor a total amount just about of $1,000 of return, which would be 30% return since those lows. That's why corrections are not as bad as they seem. And even the one back here in November, right? Because they create opportunity. This was an opportunity. This was an opportunity. This is an opportunity. These pullbacks here have even been opportunities, even here. And the one that's about to form, wherever it goes, right? Big question mark. Or if it just jumps back up, the opportunity lies in that dip before things go to newer highs and new resistance levels. So yes, correction could be coming. The worst case scenario is 3,500. The bad scenario is 3,800. And the best case scenario is 4,000. Okay? I want you guys to be aware of that. The best case scenario is 4,000, just pulling back 200, doing a 5 to 10% pullback. The worst is 3,500, and the bad is 38, which is about 10% from these levels and these highs. And we're going to have to see how things play out, what stocks are falling, and if growth continues to go higher while the stock market's going lower. That would be a big sign of a rotation. As always, if you learned something new, don't forget to subscribe. Click on the bell so you don't miss a single video that I post. And all I ask for is 3 to 5 more minutes of your time. I'm going to share with you guys a ticker symbol you won't want to miss, as well as the opportunities I found yesterday morning over at the Discord and shared it with the members. And if you want to know what stocks I watch daily, you're more than welcome to join us. The link is down below in the description to the Discord. Stay tuned. So the ticker symbol I want to share with you guys today is one that's actually pulled back and it's consolidated. And before we look at the chart, I want to share with you guys the opportunities I found yesterday over at the Discord. I shared it with the members. And if that's something you want to become part of and you're interested, you're more than welcome to join us. The link is down below in the description to the Discord. And by joining, you will become part of a growing community of investors all looking to learn and grow together to maximize profits and minimize losses. So we caught MATX at $1, jumped up to 104, giving us about a 4% opportunity. Now GERN, we caught it at 163, giving us a home run opportunity on the day. CBLI, caught it at 512, fell back down to 5, jumped up to 530, giving us a 5 to 10% opportunity. And then we went ahead and caught UTME at 1940, pulled back to the 18s. I was watching it with caution. I was really focused on inflow, and it jumped up, giving a 10% opportunity. And throughout the rest of the day, it gave 5 to 10% opportunities through the ups and downs. Now, the one ticker symbol that I mentioned after the bell, and this was when it was jumping up and it got halted, was ALFI. It got halted. This was one stock we already hit a home run on this week. I don't like to recycle stocks, but I was watching it because of the momentum. If it pulled back and if inflow continued to come back in, it was presenting itself as an opportunity. So let's look at these charts together. And GERN was one of our home runs of the day. And this is the possible opportunity of a highest point of 30% plus. Mentioned it at 163, pulled back to the 150s, and took off for the rest of the day. Now, one of the best strategies I use is a stop loss limit order. I do not buy in the pre-market. I try to buy in the weakness of the dip of the first several minutes of the day. And it pulled back for the first 30 minutes. And just hypothetically speaking, to give you guys an example, I would have bought somewhere in that dip, right? Put my stop loss limit order, and if it doesn't execute, I ride the momentum until I find it to be actually worth getting out, right? And usually my goal is 5 to 10%. So on this type of stock, I would have caught the dip somewhere around this area, put a 10% stop loss limit order, and if it doesn't execute, I ride the momentum. My stop loss limit order is the cost of trying, and if it executes, I move on and I go ahead and find another opportunity, or I just take that day off until I find another opportunity the next day and move on. You can't revenge trade, and you can't chase a trade going insane trying to find gains that you already lost, right? So it's very important. It's all about timing and execution and having a strategy. Now, ALF, I talked about it as it was going downwards at 682, pulled back to the 650s, and then it jumped up to a point here of giving about 725, 730 range at a highest point, pulled back down in a matter of minutes, and it hit the lowest point of 640, and even catching it anywhere in this area. If you put a 10% stop loss limit order, even at the 640 range, it would not touch it. You ride the momentum and volatility, and then if it goes back up, you make your 10 to 20%, your 5 to 10%, because it gave a highest point of 25% plus. Started watching it here, kind of sat sideways and dipped a little bit, and took off towards the middle of the day. So if this is something that interests you and you want to become part of, you're more than welcome to join us. The link is down below in the description to the Discord. So what's the stock you want to add to your watch list? Well, it is TRUE, True Car Inc. So True Car Inc. is a stock that I started watching this past weekend. I mentioned it on the Patreon, and it's been sitting sideways, and it was actually dipping pretty hard, and we've caught it at a consolidation period, right? This stock has actually become profitable in 2020. The goal is for it to continue staying profitable quarter over quarter. Now, the first quarter of 2021 has not been the best, and that's probably why the stock actually has been pulling back, and that recent earnings was not as strong, right? We saw the quarters, and they're doing all right, but they're not as strong as they could be, right? Of profitability. They're beating expectations, but they're not actually profitable, making the value of the stock actually go down. Now, there's no better time than now to do research on this stock because it's only up a 20% jump from its most recent lows in April, and from the lows of November 2020, it's actually up close to 50% where it's at now. So this is definitely a time to do research on a stock that could either go into further weakness, presenting itself to become a better and bigger opportunity, or actually watch it before the next catalyst that actually makes it shoot up to newer highs. I definitely would encourage every single investor to do more research on this stock, to understand how things are turning out for this company. And as always, this is not financial advice. I'm just here to enlighten you guys on the stocks I'm watching, why I'm watching them, and what I like about it in the charts. And in no shape or form am I telling anyone to buy, sell, or hold any positions on any of the stocks I mentioned. But thank you guys so much for watching. I encourage you guys to do more research. This is definitely one that I have on my watch list, and I would definitely like to share with you guys. And thank you guys so much for watching. Let's make some money.